So I came across an article published by BNN Bloomberg this morning saying the Canadian inflation has come down and the wages have gone up. I don't know why the Canadians are so frustrated about the economic activity. That headline actually caught my attention and I was like, this must be one of the sarcastic article published by BNN Bloomberg on the economic condition, because that certainly is not close to the reality. So I went through the article and there are certain statements that sound so frustrating that I wanted to share with you and wanted to know your reaction to it as well. So let's take a look into it. So basically, our dearest finance minister, Freeland, she has been taking every opportunity to remind frustrated Canadians that after a bumpy pandemic recovery, the nation's economy is actually doing a lot better. Inflation is now at 1.6%, below Bank of Canada's 2% target. Interest rates are falling rapidly, and more cuts are on their way. The economy, while weak, has avoided a much feared recession. If you don't know, that the way inflation is calculated by Stats Canada is they compare the prices of goods and services today compared to last year this time, and they calculate the difference, how much the prices have increased from last year this time and now. That's how they calculate CPI. So 1.6% means on average across all the products and goods and services that are in the CPI bucket, the prices have gone still up, but at 1.6% compared to last year. But I have lost, and I don't care if the inflation is under Bank of Canada's 2% target. I don't care if the interest rate has come down from 5.25% to 4.25%. What I care about is my purchasing power has been lost up to 20% going back all the way to 2019. So if I compare what I used to buy with $100 in 2019, I'm paying more than $100, like almost $120 for the same stuff that I used to buy in 2019. It is costing me $20 more, which means straight away, across the board, I have lost 20% of my purchasing power. Period. That's what I know. When these politicians quote inflation is down, it doesn't mean the prices are down, They are sharing you a cherry-picking data to manipulate you that, hey, look, inflation is down. Hey, look, the interest rate is down. But the damage has been done. I have lost 20+% of my purchasing power. My currency has lost its value against the stuff that I buy. Food, rent, property prices, car insurance, all the stuff that I buy for my daily life has gone up. My currency, this currency that I spend, has lost 20% of its worth against the stuff that I buy. That's the most important thing for Canadians to understand. Even though the inflation is down, prices have not come down, and they're not going to coming down anyway. Unless we go into a severe depression when we see a outright deflation, then we can see the prices are going to come down. But if we stay in the same range of CPI, that means the prices are still going up, but at a lower pace, at a lower speed, at a lower rate. And when they say the wages have gone up, I don't know how they are comparing this. Like, if I ask you, have your wages gone up by 20% in the last 4 years? If the answer is yes, then yes, you are the lucky one to beat the inflation. But if I look at myself, my wages have not gone up by 20% in the last 4 years. But my expenses have gone up by 20% for sure. To some extent, it has gone more than 20%. Because if I consider all the stuff that I buy, fuel, my kids' education, grocery, gas, utilities, internet, mobile phone, rents, mortgages, if I calculate all of this across the board, it is easily more than 20% that I'm paying what I used to pay back in 2019. So when these politicians are telling you that inflation is 1.6%, the interest rates are being cut by Bank of Canada. By the way, we are the first central bank in G7 to cut rate first time, second time, third time, And you're still complaining? How dare you, Canadians? You should not be complaining at all. We are the first country in G7 to cut the rates. And you're still complaining? That's the reality of our politicians, guys. Okay? So next time if they tell you the inflation is coming down and rates are coming down, you tell them you have lost 20+% of your purchasing power. That's the reality. And that purchasing power is not coming back to you. Okay, whatever you lost, it's gone, and you will continue to lose your purchasing power because of the currency debasement. This currency, this fiat currency, is going to continue lose its purchasing power. That's how the fiat money works. Okay, and the amount of debt this government has, it cannot be paid back with productivity. The productivity of Canada is in this direction. So if you calculate the GDP per capita, we are in outright recession. So in order to pay back that debt, the currency needs to be devalued, debased. Otherwise, we don't have the economic growth to pay back that debt at some point. Unless some sort of a miracle happen, I don't see there is a way out to pay off that debt without debasing the currency and using productivity growth. Anyway, correct me if I'm wrong. Put your comments down below. Let me know what you think about that. And check the links in the description below. I sent out weekly newsletter about these topics. If you are interested in reading, subscribe to the newsletter, give me a thumbs up and subscribe, and I'll see you in my next video. Take care. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.